Hey folks, welcome to Pro Trader Strategies. My name is Eric Wilkinson and this is Spotting the Trade. I'm going to get you folks what you need to know before you roll, and that's going to be talking about economic data, how that impacts the overall markets with a little market analysis, maybe even sprinkle in a little geopolitical fodder to round off that analysis, and then finally talk about some strategies we could implement into a portfolio based on the assumptions we come up with in our market analysis. How many times can you say that in a day, I guess? All right, so without further ado, let's get on with it. A couple of things going on here. We got Amex, American Express, coming out with better than expected earnings. That's given them a little bit of a lift to the upside. They're saying it's attributed to people traveling and using those credit cards. Something to keep in mind is Visa and MasterCard as well. They'll probably follow suit with that move today. I think they're up about Amex is up about 5%. I haven't seen really much of a move here at all in anything other than American Express. All right. Also, the other talk of the town is Twitter and battling back and forth. Well, Twitter came out with earnings today and they missed. Thought they were going to come out with a little bit better than expected, but no, they missed on the earnings number there. Some of that bringing up or rehashing this Twitter debate about Elon Musk buying Twitter. If you ask me, I think that what he's done with the price of the overall stock there, I think he probably should have to buy Twitter. So let's just take a look at it since I'm talking about it. I don't know where Twitter is trading right now. Let me find a clean chart here. There we go. Twitter is not going to show where it's at right now, but I do believe it is off a little bit here. Let me get to this trade here and throw this over here because I was checking out a couple of the stocks here. You can see slightly better here on MasterCard, Visa, based on the Amex move or American Express. There you go. You got this up almost a little bit better than 5% there on the morning session here. Then we got Twitter, which is not probably doing very well this morning at all. Whoops, I got to go Twitter. There we go. Twitter, it's not really doing too bad, but we can see if we flip over to here, they did miss on their earnings expectations. That's actually, 2 cents worse on the headline number there for Twitter for their earnings. So a couple of things here. I think we're going to get a little bit of lift out of the credit card sector. They're actually pushing the Dow Jones Industrial Average into positive territory right now. Looking across at those, let's get rid of that. Back to crude oil here coming off. Something to note here, probably see a little bit of weakness here in crude oil on lack of demand. We're looking at some manufacturing numbers. I told you today was the day to keep your eyes out. Great Britain, got a lot of economic data here for retail sales. Actually, Great Britain comes in with retail sales slightly better than expected. It was supposed to be -2, came in at -1. They did revise last month's number down 0.3%, so erasing that headline number beat really. Then Canadian retail sales also beat on the headline number there. Now to the flash estimates, we've got the Purchasing Managers Index. Remember, purchasing managers are the guys in the manufacturing sector or service sector looking at the demand coming into their system and ramping up or pulling back on production based on what they're seeing there. We can get a good look at that by seeing whether or not this number comes in above 50, which is expansion. Anything way above 50 is really good expansion or really positive. Anything below 50 is contraction. All right. Now in Europe, what are we looking for? France, Germany are manufacturing sectors. Broader area is more service sector. So they strip out the manufacturing for France and Germany from this number. So if we're looking at service sector from France, comes in at 52. That's going to be one of the only ones you guys hear that is above 50. French manufacturing comes in at 49.6, expected to be 51. German manufacturing comes in at 49.2, expected to be 50. Service sector for Germany coming in at 49.2 again, expected to be 51. Then broader outside of Germany and France, the European region coming up with the manufacturing number of 49.6, still below 50. Service sector, whoa, 50.6. That one was expected to be 52. Great Britain's manufacturing PMI does come in line with expectations at 52.3, and a little bit better on the headline number from the Great Britain services PMI. I came in at 53.3, expected to be 52.9. So not really great economic data coming out of Europe on these PMI purchasing managers, all of those pretty much coming in below 50 or just toggling, that high water mark there. So looks like a little bit of a contraction there. Now we do get our own services PMI and manufacturing PMI here in the United States later on here. That number, not necessarily the headline number we look for. We look for the Institute for Supply Management, or the ISM, manufacturing and services PMIs. But still good to look at. Our numbers are expected to come in at 52, somewhere abouts there. Keep your eyes out on that. If we come in below 50, you could really see crude oil see some weakness. Equities actually could see some upside with these PMI numbers coming in below expectations. It is a little counterintuitive to think that we would be rallying on some of these numbers, but it could be more of a relief rally coming into the markets here as the markets look to the bonds, which let's just go over to the bonds. Not really a whole lot to see here in equities, but bonds moving to the upside. That's because some of these numbers are coming in a little bit weaker. That would expect that the Fed might be pulling back on some of these interest rate hikes here as the economy is already starting to slow here. We're already seeing these numbers pull in below 50. That is definitely a signal that there is contraction in the economy. So bonds are going to start wanting to move to the upside, showing that the Fed is probably going to limit some of their interest rate hikes, and or that the bonds, we could see this yield, we got this inversion already where the long end of the curve has basically shorter interest rates on it than the nearer term. And that's because the market is predicting that the Fed will overdo this interest rate hikes. So we've got bonds moving a little bit higher. Like I said, I would not be surprised to see equities start moving higher based on the fact that a celebration of lower interest rates. All right. Gold futures finding a bottom here. We talked about putting in this line here, tweezer bottoms, looking to take advantage of some kind of move to the upside, but it looks like the upside might be in Bitcoin. And hey, folks, you see this little setup we've got going here in Bitcoin. I've been talking about this a couple of times, haven't had a very good example of it, but here we go, seeing this pop up right now. We've got those counter opposing dojis that I talked about right here in this market. Now, what does that mean? We had a little bit of a top right there, but it broke away with the candle here that broke that topping pattern. And now we've got those two counter opposing dojis. Yesterday, I talked about it. It doesn't matter if they're red or green. Anytime we get these counter opposing dojis that look like this, really when they come together, you kind of jam those together, you end up getting one of those seriously indecision type of candles, right? So what that means is that this risk is still to the upside in Bitcoin here. It's a continuation pattern. Yeah, you will have a little bit of overhead resistance right there on that 50-day simple moving average. We could see some markets slow down around that. But again, I would expect risk is to the upside here at Bitcoin, just based on the way that the market is setting up here with the candlesticks formations. And then we can move on to the VIX. VIX is coming off because it's expecting markets are going to celebrate some of this and start moving to the upside, despite the fact that, yeah, we do have slightly negative territory here for the NASDAQ. Dow Jones Industrial Average in positive territory, likely being brought up by that Amex earnings. Some of the blue chips are going to do better right now in a slowing economy. They will start to be the place where people make that the store of value. E-mini S&Ps just slightly in negative territory, only by about 5 ticks. You can see basically overnight inventory pretty flat. Nobody really making any moves here on a Friday. Something to note, again, early morning is going to be where we see these trades. As soon as we see the U.S. Flash Services PMI, folks, there's going to be maybe a flurry of trade going on the next 15 minutes. That number comes out for me here at, it comes out, I think, right around 9:45 Eastern time there. All right, so keep your eyes out for that. 9:45 Eastern. 10 o'clock is probably where we're going to start seeing the institutional traders shut down and make that rush for the Hamptons. Get out of town early. Not going to see that institutional investor all day long, folks. It's going to start to see the volume sop up out of the markets around 10:15, I'm guessing. So retailers will probably come in following in and buying. So risk is definitely to the upside across the board in equities right now, barring anybody saying anything crazy or Biden falling over from coronavirus or something. Any of that might change what I'm looking at. But right now, risk is to the upside here in equities. And I had Twitter all set up to talk about with that news on Elon and the earnings call there. So markets, keep your eyes out for that. Hopefully you guys are selling puts with the high volatility. That volatility is not going to last very long, I don't think, especially if the markets are going to be moving to the upside. My IBM, we might as well take a look at that. I did get that trade off, folks, but market is moving against me here in IBM. Market is moving against me, came down and tested some key levels, didn't quite get below this 125 area, which is where I was looking to find support. When we're trading around this market profile here, you can see we got a little overextended to that value area low. That acts as support as well. As a matter of fact, that acted as a better support than my Fibonacci's here based on some of the key metrics that we found here around the pandemic and these underlyings. I mean, IBM loves to trade sideways there. So getting involved in IBM somewhere around this 120, we could drop this chart into a longer term chart here. Let's go out a couple of years and just show you where IBM has pretty much stayed within these ranges for the last several years. Pre-pandemic, we were a little bit lower, or right after the pandemic, obviously a little bit lower. Pre-pandemic, look at that. We were right where we are here and now. So it's gotten back to its trend channel and sideways trending market is what I'm looking for this underlying to continue for the foreseeable future. Folks, I've been trading IBM since I was in college and it was still right around 100. So it hasn't gone anywhere. So selling those 120 puts, I'm not too concerned about, despite the fact that back in the 90s, 120, I would have been happy to sell IBM out at. That's where we're buying it today. So maybe a slight incremental higher on that paradigm. And that's all I got for you. Going to continue to look for opportunities to sell some puts in names that I wouldn't mind owning, especially names like IBM, blue chip, that could really weather the storm that we're going through right now in the markets or the economy. Not quite in a recession yet, but hey, those PMI numbers not looking too good. That looks like we are definitely headed towards recessionary waters. Okay, that's all I got. Hope you guys have a great weekend. Don't forget to check out our webinars where we are cracking the code to trading options. I'll give you guys some real easy ways to remember the Greeks and how they perform at any given moment. So please check that out. Don't forget to hit the like and subscribe with the bell. The bell will let you know when I pop in and announce for these market videos. All right. If you can't take that, take it easy.